I definitely want everyone to know, pay attention's partnership with YouTube is not investment financial advice. All programs, resources, curriculum, and conversation are intended for informational purposes only. All thoughts expressed by Ace, myself, or anyone on this channel are opinions not used for or with the intent of instruction. We ask you to always do your own research and trade or invest at your own risk. Thank you. Now, what up, everyone? It's your boy Savior. I'm super pumped up for today's episode. You already know. Let's get focused. Let's get ready. Another episode of Got Assets. We are continuing a crypto one-on-one conversation where you and I, as well as Ace, we talk about, we learn, and we grow in this conversation of crypto. So I really want everyone to get ready as we again start this episode, because last week we talked about crypto scammers. The week before that we talked about stocks versus crypto. So today we're gonna talk about passive income. We're gonna talk about making money in your sleep, making money without you lifting a finger. And I know I'm excited. So today let's get familiar with how we can make passive income in this new, like Ace and I just called it, billion-dollar baby called cryptocurrency.
Yeah, you know, and passive income is very much so possible in the world of digital assets. I mean, there's various ways to put your assets to work, whether it's liquidity providing, staking, lending. I mean, digital assets and passive income go hand in hand for sure. And so with that being said, this week we're focusing on patience as our word of the week, meaning the capacity to accept or tolerate delay, trouble, or suffering without getting angry or upset. And I just want to say this here at Pay Attention, we don't believe in building wealth in a quick fashion. Wealth obtained fast is usually gone fast as well. So we definitely want to promote creating wealth through a lens of longevity and truly understanding what it means to have that generational wealth.
Lit. And man, I like, for your word of the week, man, I think that's great. But that's crazy. I never knew this in the definition till you said this. The capacity to accept or tolerate delay, trouble, or suffering without, this is to me what blew my mind about patience, without getting angry or upset. I never knew that was part of the definition. But yeah, that is, I guess, shows the maturity is if I can be patient. I'm not patient if I'm yelling or if I'm getting frustrated or if I'm, so bro, that's crazy. Like, and it sounds like common sense to say, but to actually just say, okay, bet.
Yeah, kind of like, you know, calm heads always prevail type situation. So, you know, patience and being calm definitely are symbiotic in that situation.
Right, and that's for our college students, that's for our family, that's for our parents, that's for our grandparents, for our students, you know what I'm saying, everybody. Patience is a virtue we all must learn to go through at one point in our life, you know what I'm saying? So why not master that skill if we're going to have to deal with it every day, you know what I'm saying? So family, with that being said, after the word of the week, we like to officially welcome all first-time viewers and our returning viewers. So we want you guys to comment some topics, subscribe to the YouTube channel, like this video, as well as just be a part of the conversation. Create some energy, create some momentum, and of course share this video with anybody that you would like to make money with or get educated with in the form of cryptocurrency.
Yeah, so let's go ahead and get into it. Obviously our topic for today is passive income in the form of crypto, but what does passive income with digital assets look like? A lot of you have probably heard about staking. It's definitely a hot term when it comes to digital assets. It's a term that all, you know, parties involved, if you're interested in getting into digital assets, you should definitely be familiar with the term staking and what it actually means. Right. So, you know, Savior, you know, when you hear passive income opportunities, you know what I'm saying, like whether it's crypto or any other asset, man, what comes to mind?
Man, when I think of, that's a good question, bro. Okay, when I think of passive income or when I think of a crypto or any asset, I really like to think of passive income. And another word for passive income for me was residual income.
Residual, yeah.
You know what I'm saying? Another same thing, but you know what I'm saying? I like residual income because I can put in the acronym, which I got from a mentor of mine a long time ago, and it stands for RICH, right? Residual income creates happiness. RICH. You know, and so with that kind of got me to thinking for myself as a 19-year-old college dropout that just started investing in Bitcoin, that just started investing in the foreign exchange market. How can I make money in my sleep? You know, I'm telling my mom I dropped out of college, so I need to be making money. I'm living back in Houston. And so, man, when I started finding out ways to create passive income, it just got me looking at my finances. And when we looked at passive income, it was like, bro, I was like, when I looked at passive income, I was like, bro, okay, let me look at some statistics, you know. And I realized that first, about 84% of the population makes less than $100,000 a year. You know what I'm saying? And so when we look at passive income, another statistic, I was like, bro, okay, bet 80% makes less than 100,000. So that is about 20% of the world with about 100,000 plus as an annual income. And so according to the chamberofcommerce.org, right, this is a statistic, but the US Census Bureau says that 20% of American households earn passive income either through dividends, interest, or rental properties. Among those households who do have passive income, the average or median amount is $4,200 a year. So that sounds like it's not a lot of money.
Yeah.
Right, but we're talking about passive income. So these are actual people that are working jobs. These are people that are getting up at 7, 8, 9 a.m. just like you and I. But while they're working that opportunity or that occupation, they have an income going for them. So, you know, passive income to me is similar borderline to residual income. And when I looked at how most of the world is making less than 100,000, it started thinking, okay, bet, what do they not know? And so when I looked at what does the top of the percent, what do the top percent of the world know? They're creating passive income, you know. So, you know, it's a lot, you know. So we're not gonna stay too long because, again, Anthony said we are talking about staking and making passive income with crypto. But I do want to give people an opportunity to look at or think about passive income because there are multiple ways. You have, of course, stock investing. You have crypto staking. You have drop shipping. You have you could become a blogger. You could sell handmade goods. You know, you could run an affiliate marketing business. There's so many different opportunities for people to make passive income, but we highly encourage, one, as Black men, two, as investors, three, as a community, that everyone should be investing in a passive income for themselves individually, as well as a family.
Yeah, definitely.
That's pretty much. I hope I answered your question, Ace.
Yeah, no, you did. I like all the other color that you added as well. So perspective is everything. So the more perspective you can add or you can gain from somebody else, you know, the better off you could probably include it in your everyday life and try and help you work through some of the obstacles you may see. So I appreciate that. But yeah, no, like Xavier said, today we talking about staking, you know, and passive income through the lens of digital assets. So, you know, staking is essentially allowing for a platform, whether it's centralized or decentralized, to use your asset in one way or another. So you're essentially staking your asset with the platform, again, whether it's centralized or decentralized, and allowing your asset to be used whatever the terms of staking on that particular platform are. You're allowing your assets to be used by the underlying network, the platform. They can, you know, do all sorts of stuff with your asset, but it essentially is staking and earning a yield in return of, you know, taking on that risk. You definitely earn some yield of some sort or a reward of some sort. And within staking is a general term, right? But there's definitely a difference. You can break staking down into three different types of ways in which you can utilize your asset. So there's liquidity providing, there's staking itself, and then of course there's lending. And basically liquidity, they all have differences, right? And they're all similar in some ways as well. The way in which they're similar is that regardless, your asset is being used to generate you, the owner or holder of that asset, a return for taking on whatever the risk you agreed to. But again, there's differences. So liquidity providing is when you allow your asset, you stake equal amounts of an asset. So say it's XRP USD or something like that, just to keep it simple. You take equal amounts of those two assets and you provide that liquidity to a DEX and allow for swaps to be made using that pair. And you, as the holder of those two assets, you get paid what they call swap fees, right? So every time a user of that DEX goes on and makes a trade between that pair, you, as the underlying liquidity provider, you get paid a swap fee. And then usually platforms allow you to take it a step further and allow you to stake those tokens that you are allowing to be used as liquidity and earn additional rewards, usually like a platform token or something like that, or a DEX token. So not only are you, again, earning the swap fee for providing the liquidity, but you're also earning the platform token as a reward. So that takes staking a step, or utilizing your asset to make a return a step further. And then finally, just to keep things basic, is lending, right? And lending, again, is allowing your asset to be used in a different manner, and in return for taking on that risk, you're getting paid a reward. And lending is probably the most risky, just to be honest with you, out of these three. But lending, you're essentially allowing someone to be loaned a certain amount of money, right, on the platform. And obviously there's collateral requirements and stuff like that. All those things will differ depending upon the platform in which you're allowing your assets to be lended through or borrowed through. But lending is literally like it sounds. You're allowing someone to borrow against your assets, and then return for taking on that risk. And in this sense, the risk would be someone defaulting on their loan, not paying their loan back. You get paid a reward to compensate for that risk. In most cases, I would say lending probably pays the most, but again, higher rewards, higher risk, right? So you gotta be able to juggle that and make decisions based off of your risk appetite. Staking is literally like you're taking those LP tokens, right, that you receive from liquidity providing, and you're staking them on that platform to now earn the DEX token or the platform token. And staking, again, can be done on a centralized platform. So like, BitTrue, that's a centralized exchange. They offer staking. They're pretty big on staking on their platform. By staking on BitTrue, you can either earn BTR or whatever other token that they're offering in that particular staking pool. And then lending, of course, is just loaning your assets out, allowing them to be borrowed against, and you're earning a fee or interest off of that from someone borrowing against your assets.
Okay, staking, lending. Okay, I got the difference. Okay, perfect. Okay, but I'm gonna just pick up on staking now.
Yeah.
Okay, but so liquidity staking. The next is liquidity staking. With liquidity staking, liquid staking, your tokens retain their liquidity despite being staked. Now, this just allows you to be a consumer or an investor. You can now cooperate with both centralized and decentralized platforms. And that therefore now you have a mass area. You have a mass volume of users, and you have a mass volume of people that are interested, engaged, and also using that blockchain on a daily basis. Next, we have crypto liquidity. Like in traditional markets, it is the efficiency with which any digital asset can be converted into cash or token equivalent without affecting the market price. Think of lending as a way of a loan in a crypto. So the reason why we talk about liquidity providing, the market makers, liquidity staking, using your tokens, and liquidity lending, loaning your tokens, I want you guys to draw a similar parallel line to how this looks just like the centralized banking system, but it's just in a different form. You're doing different things, but with a different type of currency. One thing that Ace broke down to me was think about your cryptocurrency as a community. So you have your US dollar community, and you have your crypto community, right? But the only thing about your US dollar community, that's only going to be valued based off the inflation at the time or the country or the economy at the time, as opposed to a crypto where this is going to be based off of a asset that can grow or shrink depending on the retail, depending on the value of the marketplace itself. So, you know what I'm saying? Like I said, just draw that mirror, that parallel similar to say, okay, bet liquidity providing, staking, and lending looks just like what it looks like if I was to go to a bank for a loan, go to a, you know what I'm saying, credit bureau for some help. Think of it as the same exact way. You're just doing it with one is either a fiat paper currency or one is going to be a digital cryptocurrency.
Yep. Pretty much got it, you know what I'm saying? And that's actually impressive, being that you don't really have any experience with staking. So I mean, it's definitely some terms that you gotta take some time to get your head wrapped around. But when you can draw those parallels, that's when you almost got it right there. Like when you see that it's no different in some cases than centralized finance, it's just the fact that we're using a digital currency and it happens to be decentralized. So that's actually pretty good. So yeah, just moving on, you know, staking looks different depending on the market conditions, right? Are we in a bear market? Are we in a bull market? You know, depending upon your answer to either of those questions, staking can look different. You know, a lot of people I see, at least from a market perspective, you can see like when we're in a bear market, people are typically in accumulation phase, right? Like they're not looking to pad their pockets with a payout or whatever. Typically during bear markets, you know, a lot of people they're accumulating. With token prices being low during bear markets, people are more out to spend in bear markets, believe it or not. And in crypto, spending it looks like in the form of buying NFTs, right? Like a lot NFTs go crazy during bear markets, depending on the network. So simply because go ahead.
Is it safe to say that you can make more money in a bearish or bullish market when it comes to crypto, or it's kind of similar, it's just more so to your individual advantage or perspective of the market?
Yeah, I would definitely say it's more from a strategy perspective, right? Like, I mean, one can lose money in a bull market just as much as they could lose money in a bear market, right? It all depends on your strategy. So, and that's just typically what I see during bear markets. People shift their strategy to accumulating. Okay, I just want to stack up, you know what I'm saying? When the prices get high enough, I'll start selling some off or whatever while still stacking up at the same time, because if you're already staking, you're accumulating anyway, regardless of the market conditions, right? It's just the only determining factor, or the only difference is whether or not you're selling off as much as you were in a previous market. Like for instance, in bull markets, you see people, you know, selling a lot of their rewards, right? Or they're looking to do more, to gain more, right? And people's mindset is all about that monthly, weekly, or daily payout, right? Like, you know, there's several strategies you could look to from a bull market, but most people they're selling their tokens, man. Like they're selling them as much as possible. They're trying to you know, or rotate. They're rotating into other assets that may not be as high. So a lot of people, what they do is they utilize, especially during bull markets or the beginnings of a bull market, you see a lot of people, they're taking what they've accumulated and they rotate it into another asset that hasn't seen, you know, 10, 20, 50, you know, 10, 15, 20, 30% gains, right? So like now you're accumulating more of another asset without having to take out of your pocket, right? So I'm telling you, man, strategy is everything.
That's like basically saying if I had $1,000 US, I can take it to Japan and make more money off my yen just because I like that. Even though you can't do that with fiat, that's why crypto is so powerful.
Yeah, that's what I'm saying.
Okay, so you really get to become your own bank.
Yeah,
you get to do what they do, invest, get your return. You get to make your money just like a bank But as an individual, as a retail investor or consumer, or just investor as a whole, you get to literally do what the bank does, but from the comfortability of your smartphone.
Exactly. Or your desktop or whatever. But you know, I kind of want to highlight, you know, we talked about strategy on this particular topic, but part of that strategy has to be patience, right? Like, I didn't amass, and I'm no whale, you know what I'm saying? Like, I'm not a whale on any of the tokens that I hold. However, I do hold quite a bit, right? And that didn't happen overnight. That didn't happen my first year, or even 2 years, or even my third year of being in digital assets, right? It took me patience and accumulating when I could, you know what I mean? You know what I'm saying? Like, you know, investing when I could and making the moves when I could. And now that I've been into the crypto game a little bit, you know, I got my feet wet, you know what I'm saying? I'm actually in here, you know what I'm saying? Strategy is everything. And it took a lot of patience and a lot of strategizing to get here. So what I want to encourage is that, you know, everybody that's, you know, that watches this video, or that's in our Discord, or is subscribing to our Patreon, you know what I'm saying? Always keep strategy at the front of your of how you approach, you know, crypto or any other asset class, right? Like, you can't just go in there guns blazing thinking that, oh, you're going to spend a whole bunch of money right then and there, or you spend your last, right, and it's going to make you, you know, a crazy amount of money. No, you know what I'm saying? Like, that's not smart. You gotta have patience. You gotta have a strategy, and if you have those two and you stick to those two things, then you'll be successful. But if you're only concerned about making a quick dollar and you're not thinking about strategy, you're not thinking about the longevity side of things, like how long can I keep this up type situation, then you're gonna fail frequently. Right. So I definitely want to encourage people to approach this with a strategy and with patience. But moving on, getting off my soapbox.
I think this, so patience, staking, and lending, I think it can tie into, okay, bet. So when it's time for me to make that move, right? I've been patient, I've been studying, I'm learning, or I'm doing it, right? It's time for me to make that move. Now we go into a correlation of how do my Web3 wallets coincide with staking versus lending? Because are there different wallets that you would use for the different type? So what Web3 wallets? I know that's a big conversation. A lot of research has to be done for a lot of individuals. So what are just some things that people can take to start growing in that direction?
Yeah. So obviously, if you're trying to stake or get involved in staking, or, you know, any of the other ways of passive income with crypto that we've talked about, you definitely need a Web3 enabled wallet, or a wallet that supports connecting to dApps, aka decentralized applications. That's what dApps stand for. And it depending upon what network you decide to start staking, and you putting your assets to work will determine what Web3 wallet you use. There's all sorts of them. The most common one is obviously MetaMask. MetaMask is pretty compatible with just about every network out there, so a lot of people elect for MetaMask just because it's just the most common. But there's Bifrost wallet, there's Trust wallet, there's a whole bunch of other ones. I mean, there's Ronin. I mean, I can go on, but regardless, you know, you definitely want to do your research on what's the best Web3 wallet for you. Ledger, even a hardware wallet, is a Web3 wallet. Decent, another hardware wallet, is a Web3 wallet. But again, you got to weigh your pros and cons on, you know, using one of those ones that you can easily access via your desktop or your cell phone, like MetaMask or Bifrost or Hashpack, versus using a hardware wallet that is still also a Web3 wallet, like a Ledger Nano or a Decent. And I mean, again, those are compatible with a lot of with a wide variety of networks out there. So just choose which one is best for you, that fits your needs the most. But go ahead.
definitely check out our crypto wallets episode. Anthony actually dove more into this, and he actually gave some physical examples. So we have graphics, we have websites, so we have links for you guys to look at these different crypto wallets. You may have heard them say cold wallet. Those are, like I said, offline wallets that are accessible through a desktop or internet connection. Then you also heard them say hot wallets. These are accessible through a desktop or internet connection. So you may have heard them say, what are those? Check out the episode, because Web3 wallets are going to be the next form of security, the next form of protection when it comes to these digital assets, whether it's cold or hot, so we're talking about and just because we're on this topic of wallets, and we want people to understand how passive income with staking and crypto could actually tie in, what networks allow people to actually make passive income off crypto. On example, Ethereum, Avalanche. What are some examples that people take advantage of?
Yeah, I mean, you named two of them right there. So there's Ethereum, there's Avalanche, or Ethereum with their ETH token, and several other Ethereum derivatives like Polygon, staked ETH. There's so much going on Ethereum. I mean, essentially that's where DeFi was born, decentralized finance was born. So you got to give credit where credit's due, regardless of however you feel about some of these networks. Avalanche, same thing. There's a whole lot going on Avalanche. They have some pretty interesting DeFi applications that allow you to stake assets and earn a yield. NFTs aren't really popping like that on Avalanche, but they do exist. Flare, another one that's up and coming that a lot of people don't know about but are extremely slept on. They have a Canary network as well, so they have a lot going on over there. They have a lot of DeFi going on, a lot of NFTs, all sorts of stuff going on the Flare network. Songbird network is their Canary network. Flare launches in January with their token generation event. So I mean, hey, I'm trying to give y'all sauce, man. Look into this stuff. I ain't trying to tell you what to do with your money, but might point you in the right direction for some of the stuff. You know what I'm saying? And then of course there's Hedera Hashgraph. There's similar stuff going on there. NFTs was popping on Hedera over the summer. And of course there's DeFi, like with staking and liquidity providing as well. So there's a lot going on Hedera. But yeah, I mean, in summary, staking is passive income with digital assets. Absolutely. Right? We talked a lot about other ways to make your money or make your assets work for you in crypto, like liquidity providing, staking, lending. We briefly mentioned NFTs, but not really in the scope of this episode. Stay tuned for next episode for NFTs.
Exactly.
But yeah, you got to know the difference between liquidity providing, staking, and lending. You know what I'm saying? Understanding the risks that come with those three ways of passive income, because nothing is ever free out here. Everything comes with a risk, whether it's a small risk or a bigger risk, and you got to understand where that fits in your appetite for risk. Yeah, those are the two main things that we kind of want to highlight, you know what I'm saying, just closing out this episode. So always do your own research, you know what I'm saying, know the difference and know the risks you're taking on when you're putting your assets to work, and just understand how powerful staking is overall, as a digital asset provider. Yeah, go ahead. No, go ahead.
I did not mean to interrupt you, bro.
Yeah.
Just so people can understand how staking helps, man. You don't have to give them those number of figures, but how long have you been staking and how has it impacted your life, your family, and your personal growth in crypto?
Yeah. So for a while, a lot of the tokens that I was investing in didn't have staking capabilities, but I was very much so willing to wait for those staking capabilities. So I've been staking, for most of the time. I've been staking for the past 1.5 years. So that means that for most of my crypto career, I waited 3, almost 4 years before I could start staking some of my assets, just simply because I got in so early and staking wasn't a thing yet. But now it is, you know what I'm saying? Now it is, and I see how powerful it was, bro. Man, I was jealous as hell of like people on Ethereum staking and stuff like that, but I just didn't want to hop in Ethereum for staking because the fees were just so high. But I waited for some of these other ones, like Avalanche, Hedera, Flare and a few others, and staking's been great on these networks. And again, I've been staking with them for almost a year and a half, 2 years. So yeah.
Okay, lit. Okay, well, Ace, I think it's time for our picks of the week. And before we dive into our picks of the week, I definitely want everyone to know, pay attention's partnership with YouTube is not investment financial advice. All programs, resources, curriculum, and conversation are intended for informational purposes only. All thoughts expressed by Ace, myself, or anyone on this channel are opinions not used for or with the intent of instruction. We ask you to always do your own research and trade or invest at your own risk. Thank you. Now, let's definitely give them the sauce that we have, man. So my stock pick of the week, man, I actually kind of want to highlight what we talked about in our Discord community. If you haven't plugged in, plug into the Discord community, link below in the bio, plug into what we have going on. But we talked about on our last stock call last Wednesday, I talked about the dividend calendar, and I brought to the table for how people could look at the stocks from I'm not only investing this as a long-term play, so I can invest in this company for the next 5, 10, 20, 40 years, but I also can give myself an opportunity to get paid in those 5, 10, 20, 40 years through dividends, And so what we did, one exercise I did was I actually had everybody just randomly hop on the car. I said, hey, what's your birthday? And they gave me their birthday month, right? And off their birthday month, I said, hey, did you know that this company gives their dividends this month? So you can actually invest in this company and get paid dividends your birthday month. You know what I'm saying? So we talked about dividends. Yeah, you know what I'm saying? And so that calendar is pretty lit. And of course, we want everyone to take advantage. So definitely plug into the Discord. But my stock of the week is going to have to deal with the dividend calendar. We are going into 2023, so it's only right that I prepare people for the first 30 days. I'm not talking about New Year's resolutions. I'm not talking about anything. I'm talking about dividends. I'm talking about finances. I'm talking about money. So one stock you can invest in is actually in the financial industry. We have energy as an industry, technology, education as an industry, but financially, we can invest in one stock I think is pretty popular that actually drops their dividends reports in January is Chase. Chase, as you know, is a very popular banking institution. They do international and local financial transactions for millions of people on a daily basis. So Chase, I just want to actually give y'all Chase's current stock price, because Chase, like I said, is going to give their dividends in January. So does that mean invest in Chase now, you get your dividends? No. So how dividends work, you actually have to be invested into that company for a period of time. Now, what I like about dividends, what most people don't know is, you don't have to own a full share to actually get paid dividends, but you do have to own a percentage of that share for at least 60 to 90 days. And that's going to be strictly on the company's say, you know what I'm saying, how long they want you to hold before they pay out dividends. Like I said, 60 to 90 days is the average length of term to hold a share. So Chase is real quick. Chase's, their ticker on the NYSE, New York Stock Exchange, is JPM, right? JPM, otherwise known as Chase and Company. Their stock right now is $132 a share. Now, I do want to highlight another stock that people get kind of confused. You also have CCF. This is the Chase Corporation ticker. Now, the only reason why I'm talking about the two different is because the Chase that I'm talking about is JP Morgan that gets dividends out on Monday.
Yeah, right? not the Chase Bank that's around the corner. But
exactly. Exactly. So definitely, if you want to invest in Chase and you want to be a part of that dividend, again, they don't give dividends once a year. I think they do it every quarter. So like I said, JP Morgan Chase and Company is a company that you can invest in that can give you dividends as an investor. So if you bank with Chase, why not invest in the stock and own some shares?
Yeah, I like that pick. JP Morgan actually has a lot of dealings in the digital asset realm, so I'm very familiar with JP Morgan. So that's a good pick. So my crypto pick for the week is actually AVAX. That is the native token for the Avalanche network. I kind of highlighted it in a topic earlier in this video. AVAX has a lot going on with them. They have a lot of staking and DeFi platforms. They have one in particular that I've been looking at that deals with high frequency trading. So that's actually, if you know, it's hard to get into high frequency trading in traditional finance. Usually institutions don't pick up clients unless they have millions of dollars in assets, extra collateral. That's not just like all of their net worth or assets available, but they at least have to have a couple million on hand, and they make anywhere between like 2 and 10-15% on their money. So it's actually a pretty lucrative venture if you have the capital requirements. But reason why I love digital assets so much is because they try to tear a lot of those barriers down. A lot of that high frequency trading opportunities are found on Avalanche. They have a few on there. If you're plugged into the Discord, you would know which one I'm talking about. Yes, I'll be talking about it this Thursday on the crypto call, so I won't spoil anything, but for the crypto for the week is definitely Avalanche, AVAX, the native token of the Avalanche network. So check them out.
Well, we do want to say again, thank you guys for tuning into this episode as we talked about passive income through crypto staking. Believe it or not, it's possible. And with this information, with this technology, and with our community, we hope that you can be impacted. You can start creating a passive income for as little as it takes. And one thing I want to say before we end on, it's not expensive to get into cryptocurrency. So think about this as a real big investment that can pay off long term, because we're talking about $1,000 investment can make you a passive income. I don't know too many investments that can make you a passive income off $1,000. You know what I'm saying? So that just goes to show some importance about this cryptocurrency industry. So do your research, talk to somebody that's educated, and of course, follow Ace the Greatest. Follow Ace at Ace the Greatest. Follow myself at One Savior Smith, and plug into our Discord if you want access to our 24/7 community about investing in every market that we have access to. With that being said, Ace, is on you, bro.
Yeah, no, I definitely would like to thank everybody for coming out, man. Make sure you like, you subscribe, comment some topics that y'all want us to talk about on a future video. We definitely want to make this an interactive situation. It's not just us coming up with the topics and talking to you. We definitely want it to be inclusive. Also, check out our newsletter. We drop a newsletter every Monday. Definitely a lot of heat coming from our newsletter. This is the first time I've ever done a newsletter, but it's actually pretty dope. I like the information that we put out as a team. So check out, make sure you sign up for that newsletter if you haven't already. And with that being said, next week, we coming back with another installment of the Crypto 101 series. And next week, we'll be talking about NFTs. What are NFTs? You know what I'm saying? They not just goofy pictures, but find out what else they could be. Next episode.
Yes, sir. Thank y'all. Everybody already know. Pay attention. We out.